everybody, and welcome to the 30th edition of LM's Weekly Wrap, our weekly program to cover all the market developments. First of all, we start off with the domestic markets. We come to the end of the earnings season. It's been a very busy Q3 earnings season. A lot of companies have declared their results. After the results, as we generally tend to follow the procedure, we attend analyst meets, we attend conference calls, and we understand the outlook from the companies, from where we understand the ground reality, what is happening on the ground, what is the outlook going forward for the different companies. Apart from that, we've also been monitoring the international developments because of their impact on the domestic markets. With me, as usual, is Jash. He will be giving us his insights and views on the international markets as well as the domestic markets, which will be followed by a sectoral roundup from my side. So welcome, Jash, and kindly take us ahead.
Thank you, sir. It's great to be back, and as usual, I'll be starting with the Nifty levels. We see this week we saw quite a good of bull run, but then last 2 days Nifty is under pressure after the Adani episode that happened in the previous 2 weeks. 17,800 was a very important point which we broke out today. Also, if we see, that was this point where we returned from. So I think technically Nifty is in a good space as long as it sustains these levels, and we can see maybe some kind of a good rally. If we say short covering or maybe attractive valuations, that only time can tell us. But today I'm going to talk about the global scenario. I think the Nasdaq and Dow was positive, but after the Fed commentary, after the job data that came out, that is the PPI, Producer Price Index, the CPI, Consumer Price Index, the retail spends, and also the job data. They're very strong, and it shows that the economy is sustaining and maybe on the growth side. Now this will lead to hawkish stance again for the Fed, because they actually want to control the inflation and all these. If the economy is going towards the great growth trajectory, I'm sure the Fed has to do something about the inflation as well. So we might expect 2 more rate hikes, if not 1.
And no rate cuts.
And no rate
cuts for this year.
Yeah, definitely.
That's what they have been guided. Yes.
Correct.
Yes.
So we don't see any rate cuts, but the rate hike, which is definitely negative, which we were anticipating in the last 1 month, even after the RBI increased the rates, we were still anticipating maybe a peaking out of the rates and then coming down, but we might have to wait for a few more months or quarters. Coming back to India, I think India is being I feel China be showing a very good growth rate. India is seeing the pressure of FII selling every day, and it just shows that China is very attractive and India is fairly priced.
Expensive.
It's expensive in terms of relativity.
Yes.
So I think that pressure remains. We see FII selling. Domestic investors are investing every day as well, because we do have a 14,000 crore SIP book. So as long as that's supposed, I don't think we have to worry too much, but maybe we don't see any growth over there. Coming to our rural side of the economy, we have seen some kind of offshoots. The commentary, obviously Nirav sir will explain more on the company side, but the commentary has been positive that the rural spending has begun, and we might see some kind of economic cycle to start over there, and we are depending on the monsoon, we will see a growth over there as well. Lastly, I would like to highlight one company, Air India, that was the highlight of the week, that has given about 500 orders of Airbus and Boeing, and across the world, the USA, the UK and France, all their leaders are thanking India and PM Modi on this fantastic deal, because it's an order for 5 years, and this shows that Indian corporates are very resilient and the private capex has begun. So the fear of private companies not doing capex, I think, ends here. It started by Tata and it will be led by other companies as well. Of course, the other conglomerates, we have to wait and watch what happens over there, but I think this is a very good start. And by this, I would like to because now I'm getting into sectors, I would like to hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So, as pointed out by Jash, it's a difficult task of dissecting the entire global economy, dissecting the entire domestic economy, because it's like a sum of parts game, and you try to understand each and every sector of the economy.
And being an analyst, some of the parts is one of the most challenging analysis that you do.
Yes. Starting off with the with the agri sector, I make your pardon. Starting off with the agri sector first. I think the budget has given a very strong boost to the agri economy, and we, after a strong Kharif output, we are now in the Rabi harvest. The Rabi harvest has been very, very strong. That is the winter crop, and we've seen record harvest as far as wheat is concerned. And I think the rice output has also been quite strong. So the winter crop has been quite strong, but the prices continue to still rule quite high. If one were to see the commentary given by Nestle in their quarterly result update, they have said that the prices of cereals, the prices of grain, coffee continue to rule at 10-year highs. At the same time, the edible oil prices have been at a 10-year high. They have hit a 10-year high. So all the prices almost are ruling at decade highs. And no doubt, in the case of edible oils, the prices have started moderating towards the end of the quarter. But still, I think inflation continues to be very, very sticky. Apart from this, we have the fresh milk prices, which continue to rule very, very firm on account of the lumpy skin disease and the increase in the feed cost for the farmers. So these are some insights which have come in from a lot of companies. We've got Britannia, which has said that they were able to manage their input costs mainly because forward covers were acquired for in the case of flour, and in the case of the refined palm oil, the prices have been come down from their highs. So I think if one were to take into account the commentaries of all the companies taken together, then one thing is very sure, that most of the companies still struggle with inflation. Inflation continues to be one very big uncertain factor, whether it is metals or whether it is food grains, or the inflation has been very, very sticky, and to manage that will be a very big challenge for a lot of companies. First, we start off with the auto sector. The auto sector has been one of the star performers of Q3. We've seen companies like Maruti, Tata Motors, Mahindra & Mahindra, Eicher Motors recently, Bajaj Auto declare very strong and resilient set of numbers. In this week, we did see a correction in Mahindra & Mahindra. It was one of the losers as far as this week is concerned, but still they have a very robust portfolio of SUVs. The waiting period still continues to be on the higher side. So I think auto sector continues to do very well. And as it has been pointed out last week also, we had pointed out that the entry level cars continue to struggle. But at the same time, it's been the premium and the luxury segment which is doing quite well. We had a statement from Landmark Cars. They have said on an average the prices of premium vehicles has gone up by 22%.
That's right.
So that is a positive thing. And for premium and luxury segment, I think there is no demand elasticity, and the demand continues to be quite robust. So I think auto was one of the star performer of this quarter. The second star performer of this quarter was a capital goods space. I think the budget has given a huge amount of impetus and thrust to the capital goods space. The order books are literally brimming with activity. There have been a whole host of sectors which have contributed to the capital goods. And last week, if one were to read the commentary of a lot of companies like Thermax, ABB, Cummins, Siemens, one can get an idea as to what is happening in the economy at the ground level. If one were to take into account Thermax, they have said that they continue to get very good orders, especially in the field of energy, environment, chemicals. If one were to take into account ABB, they are saying that their robotics, their process automation, and the motions business that continues to do very very well. If one were to take into account Siemens, they are saying that they've got very good outlook as far as their railways business is concerned. They've got very big order which they have signed with the Indian Railways. As far as Cummins is concerned, they have said that the power generation business is going to do very very well, and more so because we have the Central Pollution Control Board norms, where India is going to move straight from CPCB, that is Central Pollution Control Board norms, 2 level to 4 level. And with this, a lot of equipment will have to be retrofitted, or it will have to undergo a lot of changes. As a result of this will meet very very strict environmental norms. It will meet the emission norms, and the power generation equipment is likely to be expensive by at least 30 to 40% coming December 2023. So these are all the demand related factors. Lot of other commentary is given by a whole host of companies. And one thing is very clear, that a lot of demand is coming from data centers, it's coming from renewables, it's coming from energy transition and environment related compliances, which will be done by the different companies. Cement companies are spending huge amount on waste heat recovery systems to increase their efficiencies. Third sector which we are taking is banking. Banking has done quite well, but I think market more apprehensive that the rate hikes, the cost of funds are likely to go up, which will put pressure on the margins. So we've seen FII selling continuously. We've seen good amount of FII selling happening in the banking space. As a matter of fact, in banking, we've seen SBI and IndusInd Bank, which were big losers as far as this week is concerned. Third sector which we are taking is the FMCG space. I think in the FMCG space, the rural demand continues to be a pain point, but I think with the Rabi crop being strong and prospects of good income in the hands of the farmers, I think the rural story should turn around. There are green shoots which are visible. So I think that should augur well for the FMCG sector. But nonetheless, in the FMCG space, we saw Britannia was the star performer of this quarter. Yeah. We saw Britannia ITC perform exceptionally well in this quarter. HUL was also a good performer, and yesterday we had numbers from Nestle also. But I think companies like Dabur, Marico, they have been under some sort of pressure. Next is the IT sector. I think in the IT sector has been mimicking the trends in the US markets, how the Nasdaq Composite has been behaving. So IT companies broadly have been under pressure, despite the fact that we had some decent numbers which have come in from the IT companies. But I think this week we saw Tech Mahindra, which was one of the biggest gainers, and at the same time we've seen stocks like Infosys or HCL. All these stocks were under pressure. But the star performer as far as Nifty is concerned is Tech Mahindra. It was up around 11% in this week. So I think with 5G coming into the picture, we are seeing a lot of stocks relating to 5G begin to perform, whether it is Tejas Networks or whether it is Tech Mahindra, etc. As far as the performers of this week, I think we got good support from the stocks like Reliance, ITC, Ultratech Cement, L&T. They have supported the market very well, led by of course Tech Mahindra. We had UPL, ONGC, which did quite well, and on the losing side we had Mahindra and Mahindra, which was under pressure. On the banking side we saw IndusInd Bank, SBI under pressure. On the FMCG side we saw Britannia, HUL under some sort of pressure. Defense sector stocks have
Let's not forget defense.
Yes. Yesterday we had the defense sector stocks which have performed exceptionally well because the Aero Show is going on in 2023, and Bharat Dynamics Limited, Bharat Earth Movers Limited, Hindustan Aeronautics Limited, Mithani, all these companies have signed several MOUs with different entities. And so I think the defense sector is back in the limelight. Yesterday we saw mid-cap IT stocks were also in the limelight, but I think that is more dependent on the global trends. Finally, we get a lot of queries relating to the Adani Group. and we've also given a snapshot of the compendium which has been released by the Adani Group, and very strangely that press release has been removed from BSE website. It's no longer there on the BSE website. That compendium which was released by the Adani Group, we have given our analysis also, and I think the sum and substance of that is that all the listed entities, the gross asset base is close to 3,17,000 crores, and the net debt is 1,96,000 crores. And the run rate EBITDA has been of different group companies has been mentioned, and on the basis of that inference we can conclude one thing, that Adani Green Energy Limited and Adani Transmission, they have weak cash flows. At the same time the asset base is quite high, so if one were to take into account the net debt to EBITDA, it's been more on the higher side, close to 5 times. So the debt is slightly on the higher side. So that is one. At the same time, we have Adani Enterprises, which is executing a lot of projects. A lot of projects are there in the pipeline. Adani Ports continues to be a strong performer, and surprisingly, Adani Power, they have hinted that the run rate EBITDA of Adani Power is 16,000 crores. So now that actually does not tally with what the performance actually is. So I think, but if one were to take into account the 16,000 crore run rate EBITDA of Adani Power, then I think the stock is a steal at this price. So many more things to discuss.
Sir, but we'll definitely be cautious on the Adani Group.
Yes, definitely.
Until the steam isn't clear,
yes,
we would ask you all to maintain some caution over there.
Yes, the caution is the buzzword, because the compendium has been released and it has been withdrawn also. So it's not available at least on the BSE websites. But we have actually written a note on all the sector related stocks, all the listed stocks. And there are certain assumptions which have been made by the group, so we have taken all that into account. So it's based entirely on the facts which is provided by the group, but as we say that we do core research, and we provide our inputs based on these research. So a lot of things to discuss, a lot of sectors to discuss, but time constraints unfortunately may not permit us more. Do write back to us with your feedback on the program.
Yes.
And I think we have the concluding comments.
Thank you, sir.
Jash.
I think we have definitely overshot the time today, but with so many sectors and results and the global scenario, we had to go above. Thank you. Please like, share and subscribe. Also press the bell button over there and download our app, InvestMart. Thank you.
Thank you, everybody.